Welcome to another video. We were discussing chapter 3 that talks about SA315. SA315 talks about identifying and assessing risk of material misstatement through understanding the entity and its environment. Okay, so in that there were three parts. In the first part we talked about audit risk and risk assessment, which is quite an important part, so I've just made it into a separate video altogether. Okay, and in that first part I think what we talked about is how we're going to assess the risk, what are the kind of risks that we're going to face, right? So the first part was about that. In the second part we had talked about uh, we had talked about the basics of internal control, right? What is the meaning of internal control, what are the benefits, and what are the limitations of internal control, right? Now in this part, which is part 3, we're going to talk about components of internal control and assessing what controls are relevant, right? And then we're also going to see what are the types of reviewing or evaluating the internal control. Okay, so firstly, uh, like what this components of internal control is basically what makes an internal control, right? Like what forms a good internal control, right? So there are 5 parts. Okay, so 5 parts to this is: firstly, it is the control environment, the entities wrap, information systems, fourthly, monitoring, and fifth is control activities. I'll just give you a small summary of each of these headings, right? So that we don't feel completely burdened when we are studying it in depth, right? So basically, control environment is how good the environment is. Is the management ensuring that honesty is maintained, right? So we're just going to have to check whether uh, there's a environment of honesty, right? Of honesty, whether the management is encouraging people, right? Encouraging people to do what? Encouraging to report any fraudulent activity, right? Fraudulent activity. And what is the organizational structure? Like, is it too difficult for any person on the bottom to notify somebody on the top, right? They have to go through too much uh, barriers before they can report something, right? So we're just going to see how the environment is, of how uh, the entity's environment is. Okay, so obviously I just ask you a few questions. Okay, you just have to reply more or less. Okay, so for example, suppose the entity that you're auditing has this environment of honesty. So would you rely on the internal control more or less? So obviously, if there is more honesty, then we'll rely more, right? Right, we'll rely more, right? And if they're encouraging people to report, right? If a lot of people, if the lower level employees are open towards rather reporting any senior when it comes to fraudulent activity, what are the training that they've gone through, right? What are the HR practices? So if all these are good, right? Meaning if there's a good environment, if there's a good environment, you can rely more, right? So that is basically what this components of internal control is about. Okay, let's not just jump into memorizing things. I think if we understand this, it's going to be really easy. Okay, so next part is the entities risk assessment procedures. Okay, so in the entities risk assessment procedures, we're going to see what risk assessment procedures the entity applies on itself. Okay, this is not auditor's risk assessment procedures. Okay, this is completely different. This is not auditor's risk assessment procedures. This is done, these procedures are done by the entity for the entity itself. Okay, it is done by the entity, it is done by the entity itself. Here we are not involved, the auditors are not involved, only the entity is involved. Entity's internal control is going to assess the assess any risk there is. Okay, so if the entity is good, if it is good at doing these risk assessment procedures, meaning they have been able to identify where this material misstatement could happen, and after assessing, after doing the risk assessment, they've installed good control activities and they've increased monitoring. So will you rely more on the internal control or less? So the answer is pretty simple. It's pretty very obvious. So you're going to rely more on the internal control. So if the entity's risk assessment procedures are good, are they good at identifying risk, or are they examining the potential effect of that risk properly, right? And what are the actions they're taking, right? So that comes under entity's risk assessment procedures. Okay. Next, in the information system, when you are auditing a particular entity, you're going to have to see what are the information systems that they use. That could be to record accounts, right? Either for record keeping, or if it is for the purpose of uh, what do you say, preparing the financial statements, right? Preparing financial statements. So if they're using information systems that are reliable, right, that have the audit trail, right, so you'll be able to assess it even better, right? Assess, and you can trust it more, or you can rely a lot on the information, sorry, you can rely on the internal control if the information systems that are used by the entity are sophisticated and a bit more advanced, right? And next, monitoring by the entity, right? This is basically the feedback part. Okay, the last thing, right? It has to be continuously monitored, right? Whether the control activities are working, right? Whether it has reduced the potential for mistakes, whether any potential mistake that could have happened has been stopped, right? So that kind of monitoring has to be kept by the entity. Okay, so that is also part of the internal control. Okay, and lastly, control activities. This is basically what are the things that the entity is doing in response to entity's RAP and this feedback through the monitoring that is done, right? So this could be control activities. I'll just give you some examples. Okay, so basically this is to ensure that the management's directives are being followed. Okay, so what are the policies that have been kept, right? For example, a control activity could be where the managers or any manager's approval, right? Manager approval for transactions more than 1 lakh, right? Or something like this. These are like control activities. So different entities will require different kinds of control activities, right? So somebody like, how we have this two-factor authentication, right? So two-factor authentication, right? So this is to ensure that the management directives are being followed. Okay, so these are basically policies that are there to prevent fraudulent activity and prevent misstatements. Okay, I'm sorry about the traffic noise. I'm like sitting right next to the window, so okay. Now we'll just dive in depth. Okay, so there's a short form for this. Okay, so the short form is for the components of internal control. Components of internal control. Okay. So the short form is, or the acronym or the mnemonic is CRIME. Okay, so this is the mnemonic or acronym. Okay, so with the first C we have control environment, sorry, rather control activities. Control activities. Okay, and this is RAP, risk assessment procedures. By whom? This is done by the entity. Okay, this is done by the entity for the entity. Okay, by from I we have information system, information systems. From M we have monitoring, monitoring, and lastly we have the control environment. What kind of environment? Control environment. Rather control environment. Okay. Okay, so these are the components of internal control. Firstly, it is control activities, risk assessment procedures, information system, M monitoring, E environment, control environment. Okay, now we'll jump into each of the following headings. Okay, so in exams they'll ask about control environment, and this has 7 subpoints. Okay, we're going to talk about that. So they could ask these 7 subpoints also. I understand it's a bit lengthy, right? So each of these have their own subpoints, which we're going to dive into now. Okay. Okay. Like I told you, the acronym for components of internal control is CRIME. CRIME. Right. The first one is control activities. From C, control activities. R, risk assessment. I, information systems. M, monitoring of controls. E, environment. Okay, so each of these headings, right, each of these headings have their own subheadings. Okay, so we're going to start off with the control environment, which has 7 subpoints. Okay, which is quite a bit, but it's going to be very easy. I'm going to help you memorize it. Okay, without any further ado, let's just start. Okay, so here we're in control environment right now. Okay, so out of the 5 components of control, right, we're going to talk about which is CRIME. We're going to start with E, which is control environment. Okay, so firstly we just go through what is written here, and then we'll dive into it. Okay, so with regard to the control environment, the auditor shall obtain an understanding of the control environment, and he has to evaluate whether the management has created and maintained a culture of honesty and ethical behavior. Okay, we have to evaluate whether the management has created and maintained a culture of honesty and ethical behavior. Okay, so if there is culture of honesty and ethical behavior, obviously our reliance on internal control will go up. Okay, can any of you tell me what will happen if the reliance on internal control goes up? Do we have to perform more substantive procedures or less substantive procedures? Right, substantive procedures is like extra our test of details, basically. Well, we won't be testing the control, we'll be testing it in detail, basically, right? So if our reliance on internal control is more, meaning the entity is able to reduce the risk of material misstatement on its own, then we will obviously reduce our substantive procedures. Okay, if our reliance on internal control is down, then we will have to do our own procedures even more, right? That's beside the point. I feel like we just got sidetracked a bit. Okay, I'll just start from the beginning of this. Okay. The auditor, firstly, when it comes to control environment, the auditor should obtain an understanding of the control environment, and he should evaluate whether the management has created and maintained a culture of honesty and ethical behavior. That's very simple, right? Firstly, he has to ensure whether the management has created and maintained a culture of honesty and ethical behavior. Okay. Second, what does he have to do next? And he also has to evaluate whether the strength of the control environments, the strength of the control environment provide strong foundation for other components of internal control. Okay. Meaning, if there is a strong culture of honesty and ethical behavior, then risk assessment procedures, the control activities, right, the efficiency of those systems working will also increase, or of those components will also increase. So if there's a bad control environment, meaning people are very unethical when it comes to the way they conduct themselves, then it's going to affect the other parts also. Suppose the person who is supposed to be monitoring the controls is complicit in this unethical behavior, then there's no point, right? So a strong control environment also has to provide a strong foundation for other components of internal control. What are the other components of internal control? The control activities, risk assessment procedures, information system, and monitoring. Right? Okay. So in this, we're just here right now. So firstly, he has to obtain an understanding of the control environment, and he has to evaluate two things. Firstly, he has to evaluate whether management has created and maintained a culture of honesty and ethical behavior, and secondly, he also has to evaluate whether the strength of the control environment provides a strong foundation for other components of internal control. Okay. Next, what is included in the control environment? Okay, so obviously the governance or the management, right? Whoever is the management is also included in the control environment, right? And their attitude, awareness, and actions of those charged with governance. Okay, so firstly, what is included in the control environment? The governance and management, right? And AAA. AAA is attitude, awareness, and actions of those charged with governance. Okay, and these are some other points, right? Control environment is not in itself a deterrent of fraud. Okay, we can't just say that if there is a good control environment there can be no fraud at all, right? So we cannot say that. So obviously there are going to be some loopholes or some places that have even though there is a good control environment, there might be a chance of fraud, right? Next, control environment does not prevent, detect, or control misstatements. Rather, prevent, detect, and I forgot the short form. Prevent, detect, and prevent, detect, and correction. Okay, it does not prevent, detect, nor correct the misstatements. Okay, but it helps other elements to prevent, detect, and correct. Okay, so this is basically the base. This is basically the base of what a control environment is, or what the auditor's role is with regard to the control environment, which is let me just go off the screen here, right, or here. So basically what we just learned now was the auditor's responsibility. Okay, so what auditor has to do in the control environment, and this control environment is part of the components of internal control. Okay, and what are the other components of internal control? CRISC, M, and E, right? So these are the components of internal control. So we're going to learn about what the auditor has to do with each of these following things. Okay. So now I'll just recap what basics were there in the control environment. Okay. So basically, what does the auditor have to do with the control environment? Auditor with the control environment. Oops. Control environment. Firstly, he has to obtain understanding. He has to obtain an understanding of the control environment, right? And he also has to, secondly, he has to also evaluate whether, he has to evaluate two things. Firstly, evaluate whether, first one is, firstly, whether, I'll just write it like this, okay. Firstly, whether the management has created and maintained culture of honesty and ethical behavior. Honesty and ethical behavior, right? What else did we see? The second point being also he has to evaluate whether management has created and maintained a culture of honesty and ethical behavior, and secondly, he has to evaluate whether the strength of the control environment provides a strong foundation for the other components, okay. So in the exam, what they might do is they might just give you this part, right? The strength of the control environment provides a strong foundation for other components, full stop, explain, or full stop, comment, right? So this is the kind of things that they can do in the exams, so we shouldn't fall for that. So we have to remember every point properly, right? And we had also learned a few things, that few limitations or a few separate points about the control environment, right? So firstly, the control environment, okay, can control environment stop, is it like conclusive evidence that there is no fraud? Obviously not, right? So control evidence cannot by itself prevent fraud, cannot by itself prevent fraud, okay. And the control environment can't prevent, detect, or correct also, okay. But it can help other components, in prevention, detection, and correction of misstatements, okay. Next, we'll just go back to what we had seen here, okay. We had also seen what is included in the control environment. We had seen that governance and management is included, and AAA, right? What is the attitude, awareness, and actions of those charged with governance, okay. Now, elements of control environment. I understand this is going to be a bit, like stressful or mind messing, right? That is probably because once you get a bird's eye view of what is happening, I think it will become much more simpler, okay. So here, what was happening was, we were discussing components of internal control. In components of internal control, one, we were seeing CRIME, okay. In this, we were discussing E part, which relates to the control environment. Okay, the same way as we found out what the components of IC are, meaning what makes up an internal control. We found out C, R, I, M and E together make one internal control, right? Now we are going to further see what this control environment is made of. What makes up a control environment? You get, this is like some Inception movie thing, right? So first we found out components of internal control, and in that components of internal control of the control environment, we are seeing what makes up the control environment, right? There are 7 subpoints. Okay, so we'll just go back to that chart. So now I'm guessing you've understood where we are standing right now. Okay, now we're going to see what makes up the control environment. Okay, let me just zoom out so you can see everything. Okay, if you can't see, I think YouTube gives you the thing of zooming in, right? I think you can do that. Okay, yeah. Okay, so firstly, what makes a control environment? Okay, firstly, it is communication of integrity and ethical values. Okay, you have to communicate values of integrity and ethical values. Okay, integrity meaning that there is no unethical behavior, right? Integrity and being ethical is quite same only, being true to your word, not doing anything that is wrong, right? So communication of integrity and ethical values. Okay, that's the first point. Second point is commitment to competence. Okay, so consideration of competence levels for jobs and how those levels translate into required skill and knowledge. Okay, so here basically what we're trying to do is ensuring that there is no favoritism, or there is no nepotism, or that kind of where related parties are selected for the job, right? So we're going to commit to competence, meaning if they are competent meaning if they have the merit, if they have the required skills for that particular job, then only we're going to give them that particular job. Okay, considering of competence levels. Okay, so commitment to competence. So first one is communication of integrity and ethical values, second one is commitment to competence. Okay, so in this commitment to competence, we saw that we have to consider competence levels for jobs and how those levels translate into the skills that is required. Okay, so basically they're talking about hiring based on competence. Okay, not based on related party or some kind of favoritism, right? Next we're going to see involvement of those charged with governance. Okay, those charged with governance are basically the people who direct the organization in a particular way. Okay, so they are in charge of overseeing the strategic direction. Okay, so here we are going to see if they're independent from the management. Okay, what is the experience of those charged with governance, right? What is the extent of involvement and information that is received, degree to which difficult questions are raised. Okay, basically we're seeing whether those charged with governance are independent from management, or do they have too much involvement in the management, right? So when there is a lot of involvement of those charged with governance in the management, you can see some level of complacency. Complacency is like degradation of the basically the degradation of the quality of work, right? Or you can see some form of reduction in the overall operating or the operation of the internal control, right? So what is the independent whether those charged with governance are independent from management, whether they have good amount of experience, right, and what is the extent of involvement and the information that is received by them. Okay, so this is kind of like a double-edged sword, right? So those chartered governance need to have good amount of information available about what is going on in their firm or in their company, right, so that they can take appropriate decisions, right? Are they getting the proper amount of information, right? I'm just basically going through the points here, okay, and then I'll memorize it further in the video. Okay, next. Next, what is the management's philosophy? Okay, approach to business risks, right? Are they really uh, are they risk averse, or are they uh, like really into taking big risks, right? So people who might be into taking big risks might also take a step towards taking an illegal action, right? Or rather, they might do something that is illegal, just to get that bigger reward, right? So they are willing to risk getting caught, or they are willing to risk paying a bigger fine or a penalty in order to get that bigger reward. So what is the management's philosophy in all this, right? So what is their attitude and what is their approach to business risk, right? Next one is attitude towards financial reporting. Okay, whether they're like, hey, we'll see, check it, we'll see it later, no problem, right? This thing, no, there's some problem that is coming here, it's okay, you just enter something, we'll see it later, right? Or are they very strict when it comes to entering the transactions, so that ensuring that there is no mistake, right? The accounting functions and accounting personnel. Okay, so basically how the management's philosophy is towards approaching the risks and how their attitude is towards financial reporting. Okay, next comes the organizational structure. Okay, the framework within which the objectives are planned, executed, and controlled and reviewed. Okay, so basically how objectives are planned, executed, controlled, and reviewed, right? There's not much to be explained here. Basically, if this kind of question is asked, if you can remember these sub points, right? First of all, these are sub points, and inside that there is sub points, right? So it is kind of difficult to expect anybody to remember these points. So just try to keep them somewhere in your head. If you can remember it and memorize it, really good. But even if you're not able to memorize it, then it's totally fine. Okay, it's not too much of a headache. Okay, I mean, there are other places where you should probably spend time, right? So if you are able to remember these bigger sub points, then it should be fine. Okay, next, assignment of authority and responsibilities. Okay, whether responsibility is assigned based on this competence, right? We can go back to this also again, right? Whether there is commitment to competency, or whether they're only giving to related parties, or whether they're doing some kind of favoritism, right? And lastly, human resource practices and policies. So what kind of incentives they're giving, are they encouraging bad behavior, where they're placing a lot of practices to ensure that the complaint is, or the report is submitted to a higher person, right? So this is the kind of things that we'll have to see. Okay, we just try to memorize these points, okay, one by one. Okay, so firstly it was communication of integrity and ethical values, and then second, commitment to competence. Thirdly, involvement of those charged with governance. Fourth, management philosophy. Fifth, organizational structure. Sixth, assignment of authority and responsibility, and lastly, human resource practices and policies. Okay, So this is a short form of here, CCMGT. So this management and TCWG, we can take it together, okay. And organizational structure are HR, okay. CC, MGT, TCWG, OSR, HR, okay. So firstly, there is communication of integrity and ethical values, commitment to competence, involvement of TCWG, management philosophy, organizational structure, assignment of authority and responsibility, and lastly, human resource practices. Okay. CC, MGT, TCWG, OR, R, HR. Okay. Let's try to write this without seeing, okay, because they might give this as a question, explain the elements of control environment. Suppose they've asked this and you write this and come, it's probably not going to get you any marks, is it now? So let's just try to memorize that. Okay, so we're going to see elements of the control environment. I feel like this chapter is a bit of a maze, right? Elements of control environment. Okay, what is the short form that we had seen, or rather the short forms, right? CC, MGT, TCWG, OS, AAR, and HR. Okay, we'll just tally that up. Is 1 2 3 4 5 6 7. So there are 7 points. Okay, we'll just try to write one by one. Okay, the first one was communication, right? Communication of integrity and ethical values, right? Let's just say the acronym once again. Okay, you're welcome to say it with me. Okay, CC, MGT, TCWG, OSRHR. Okay, what are we saying right now? So if you remember this acronym but you don't know what it's for, it's not going to be of any use, right? So elements of control environment is CC, MGT, TCWG, OSRHR. CC, MGT, TCWG, OSRHR. Okay. The second C was for commitment to competency. Commitment to competence. Okay. Next. Third, what had we seen with regard to management? We had seen management philosophy. Okay. So in this we had seen 2 subpoints, right? So the first point was rather in with the C in this first one. Okay. Firstly, it was attitude towards risk, right? Attitude. We'll just combine both of them, right? Attitude towards business risk, rather not only risk, it was business risk, and also towards financial reporting. Okay, and then commitment to competence. In this it was with regard to requiring particular skills, right? Requiring particular skills, or rather requiring it's okay, I think it should be fine. Particular skills, right? And hiring only based on that skill, right? It's okay, and you don't have to remember everything, you don't have to be perfectly perfect, right? Next, Next we saw TCWG, meaning in that it was what did we see with regard to those charged with governance? We saw how much they are involved, right? So involvement of those charged with governance. Those charged with governance. In this also we had seen some sub points. That is regard to how much involvement they have, right? How much involvement does TCWG have? How much information do they have? And basically the independence from management, right? Have they given independence to the management, or are they controlling the management, and are they controlling certain control activities, right? Next is the organizational structure. OS is organizational structure. Organizational structure. And sixth is allotment, not allotment, rather what was it? I know it was something with regard to authority and responsibility. Allocation, huh? Yeah, I think we can go with allocation. Allocation of authority and responsibility. Okay, and lastly, human resource policies and practices. Okay, next I think that's pretty much it. Okay, we'll just try remembering it. Okay, we'll just try if we can memorize it, right? So here the first one, this let's try not looking at this part. Okay, let's try not looking at this part. We'll just see from here whether we are able to tell it from these acronyms basically. Okay, so the first C was communication, right? Communication of what? Integrity and ethical values. The second C was for commitment to competency, and with regard to management, it was management philosophy, and those charged with governance, it was involvement of those charged with governance. In that there were a few sub points. What are the few sub points? Whether it is independent from those charged with governance, how much the TCWG is involved, and how much information does TCWG have about the operations of the entity, right? Okay, next one is the organizational structure, right? What kind of organizational structures does the company have basically, right? And then this is allocation of authority and responsibility, and lastly human resource policies and practices. Okay, I think it's fairly simple, and we can move on to the next part. Okay, here, how do we know whether or what do we do when there is a good control environment? Okay, so obviously a satisfactory control environment is a positive factor. It is good, it is a good thing if they have a satisfactory control environment. It reduces the risk of fraud, but it does not provide absolute assurance. Okay, so obviously in audit there is nothing that provides absolute assurance. So if this something like this comes in the MCQ, it is almost always, or rather it is always not absolute assurance. It gives only reasonable assurance, right? However, deficiencies in control environment may undermine the effectiveness of controls. Okay, so if there is any deficiency in the control environment, it may affect the internal control. Okay, so that is all it's going to do. Okay, it does not provide absolute assurance, but if there is something wrong in the control environment, then it might affect the effectiveness of controls. Okay, and lastly, control environment influences the NET of audit procedures. Okay, how is it going to affect? Very simple. Okay, if control environment is good, will you do more procedures or less procedures? So if control environment is good, then obviously I will do less procedures. Okay, I will not do more procedures. I will reduce my work. Okay, because the control environment is good. Suppose the control environment is bad. If it is bad, then obviously I'm going to do more audit procedures. Fairly simple, right? Okay, let's just come from the top of control environment, just so that we can be proud of the work that we have done. Okay, so firstly, the auditor shall obtain an understanding of the control environment, and secondly, he should also evaluate whether the management has created and maintained a culture of honesty and ethical behavior. What else he also have to evaluate? He also has to evaluate whether the strength of the control environment provides a strong foundation for other components of internal control. Okay, next, what is included in the control environment? It includes the governance or management, and it also includes the attitude, awareness, and actions of those charged with governance. Okay, control environment is not in itself a direct deterrent of fraud. Okay, there's fraud in that part. Okay, so it is not a direct deterrent of fraud. Okay, also control environment does not prevent, detect, or correct misstatements, but it helps other elements to prevent, detect, and correct. Okay, next, coming to our elements of control environment. Okay, here what we had seen C, C, MGT, TCWG, OS, R, HR. Okay, so the first C was for communication of integrity and ethical values. Second C was for commitment to competence. Next is management philosophy, those charged with governance, organizational structure, assignment or allocation of authority and responsibility, and lastly, human resource policies and practices. Okay, next. Now, if there is a satisfactory control environment, it is a good thing. Okay, it is a positive factor. It reduces the risk of fraud, but it does not provide absolute assurance. And if the control environment is bad, or if the control environment is not good, then it undermines the effectiveness of controls, and lastly, it influences the NET of audit procedures. Meaning, if the control environment is good, then we will do less audit procedures. If the control environment is bad, then we'll do more audit procedures. Okay, next, fairly simple. Now, in the components of internal control, in components of internal control, there were 5, right? C, R, I, M, and E, right? So there were C, R, I, M, E, right? So here we had already discussed about E, which is the environment. Now we are standing in R, which is risk assessment procedures. Okay, so when it comes to entities risk assessment procedures, it's very simple, right? It's very simple. The entity just has to do IEAD. Okay, I, E, A, and D. Okay, I've already written it over here. IEAD. It has to identify, estimate, assess, and decide. Very simple, right? Identify what? Business risk. Okay, it has to identify business risk that affect the financial reporting objectives. Okay, next, it has to estimate the significance of those risks. Okay, first it has to identify the risk, then it has to estimate the significance of that risk. Meaning, if that risk is something that will affect or that can cause material misstatement, okay, whether that risk is material or not. Okay, firstly he has to identify. First is identify, next is estimate the significance of those risk. Okay, next he has to assess the likelihood of occurrence. Okay, so you might have identified a particular risk, okay, and you might have estimated that it is significant, but the likelihood of occurrence, meaning the chance of it happening is very less, then it is non-material, right? So if you have identified it and you have estimated that the risk is significant and there is a higher likelihood of occurrence, meaning higher chance of happening, then you have to do, then you have to decide what actions you have to take. Okay, fairly simple, right? Very simple. Okay, so you have to identify the risks that affect the financial reporting objectives. Second is you have to estimate the significance of those risks. Okay, and third you have to assess the likelihood of that risk occurring. Okay, and lastly you have to decide what are the actions that has to be taken. Okay, very simple. I think that's pretty much with regard to risk assessment procedures. Very easy, very simple. Okay, let's just recap that. Okay, firstly we were talking about components of IC. Okay, in that, firstly we had discussed what are the components C, R, I, M and E. Out of this we had already talked about E. Now what are we talking about? We're talking about R. What does this R stand for? Risk assessment. By the entity. Okay, what does the entity have to do with regard to this risk assessment? Firstly, it has to identify, we just write down IEAD first. Okay, that is our, we just go through our normal process, no need to hurry, right? IEAD. Okay, firstly you will have to identify. Next you are going to have to evaluate. Next you are going to have to assess. Next you are going to have to decide. Okay, firstly you have to identify business risks. Okay, business risks that could affect your financial reporting objectives. Okay, next you have to evaluate. What do you have to evaluate? Significance of those risks. Okay, significance of risk, whether if such a risk occurs, could it be material or not. Okay, so that is what you'll have to find out. Okay, whether that risk is significant or not. Okay, next what you have to assess? You have to assess the likelihood of occurrence. Okay, and lastly you have to decide an appropriate action for assessed risk. Okay, fairly simple, right? So we were talking about components of internal control. In that we had already talked about E, which is the environment. Now we are standing at risk assessment. What is involved in risk assessment? It is I, E, A and D. Firstly you have to identify, evaluate, assess and decide. Okay, you have to identify business risk, evaluate the significance of those risks, and you have to assess the likelihood of occurrence, and lastly you have to decide appropriate action towards the assessed risk. Okay, next we'll move on to the next part. Okay, next is the information systems. Okay. Now with regard to information systems, what does it have to do with the auditor with regard to the information systems, right? So firstly he has to obtain understanding about how significant affect let me just start from beginning. Okay, obtain understanding about significant transactions that affect the financial statements, procedures as to how these transactions are recorded. Third, other accounting records that support the process of recording, okay, and lastly financial reporting process and controls surrounding journal entries, okay. First he has to find out significant entries, okay, or significant transactions, okay. He has to find out what are the significant transactions, and he has to find out how they are recorded, what is the procedure for recording, and he also has to see any other records that support the process of recording, meaning this could be before an entry is passed, whether there's any actual purchase invoice that support this recording, right? So he also has to check that. So first he has to see what transactions are significant. Next he has to see how they are recorded, and he also has to check the supporting documents, okay. And the fourth point being the fourth point being financial reporting process, okay. What is the procedure, how does it go from journal entry, and or rather how does it go from a single purchase order and ending up into a journal entry and later ending up on the financial statements, okay. So this is what is basically to be understood by the auditor when it comes to information systems, okay. So where does this information system stand on our components of IC, right? So in components of IC, there were 5 components, which is CRIME, okay. So out of this we have already discussed E, which is the control environment. We have discussed R, which is risk assessment procedures. Now we are standing in I, okay, or rather this is where we are standing, okay. So we are giving an explanation of I, okay. I only has 1 2 3 4 5 points, okay. So in these 5 points, the first one is the significant transactions, okay. What are the significant transactions that affect the financial statements, okay. Secondly, he also has to understand how they are recorded, okay. And he also has to check any supporting documents. Fourth point, he has to understand the financial reporting process, and lastly the control surrounding journal entries, okay. Meaning this control surrounding journal entries, I can give you an example, okay. Before any accountants enter any journal entry that is more than 1 lakh, or if they want to do or rather if they are authorized only to pass sales and purchase entries, and they want to enter uh, an entry with regard to the bank account getting involved, right? So in that case there can be approval that is required, so there is some sort of a control activity that is placed, right? So those are some of the controls that are surrounding journal entries, okay. Or before any changes is made, or how easy it is to edit a particular journal entry, right? So all that can be checked. Okay, so we're done with information system also, okay. Let's just go off screen and try to memorize those few points, okay. So when it comes to information system, there were few points, 5 points. Firstly, with regard to significant transactions affecting the financial statements, okay. Try to memorize those points. Just try to close your eyes and try to memorize those points. Significant transactions affecting financial statements. Secondly, how such transactions are recorded, okay. And thirdly, he also has to understand the supporting documents, right? Supporting documents for such recording, right? And fourth, he has to uh, understand the rather financial he has to understand the financial reporting framework or financial reporting procedures. And lastly, he also has to understand the controls that are placed with regard to journal entries. Okay, so this is about information system. So we are done in CRIME, we are done with E, we are done with R, we are done with I. So that leaves us with C and M. Fairly simple. That also we will get, you can finish it off fairly quickly. So it comes to control activities, right? Like I told you about those journal entries, it could be setting uh, a rule or something in the software that would require uh, the manager's approval or a supervisor's approval before any particular transaction is entered into the system, right? Or before any uh, entry is edited or before any entry is modified, basically, right? So before all those things are done, some approval could be required, right? So that is an example of control activities. So that is nothing but a policy, right? So saying that approval should be required is a policy that is set by the management, right? So we'll just dive into what is written here. Okay, firstly, with regard to control activities, the auditor shall obtain an understanding of control activities that are relevant to the audit. Okay, so he has to find out what is relevant. That we'll learn about later in the video. Okay, how to find out whether a particular internal control is relevant to us or not. Okay, so firstly he has to obtain understanding of all the relevant control activities to the audit or which he considers necessary to assess the risk. Okay, so the first point is very easy. He has to understand the relevant controls. He has to understand the relevant controls. Okay, now coming to the second point, the control activities are policies and procedures that ensure that management directives are carried out. So this is nothing but the meaning. Okay, control activities are nothing but policies and procedures. Okay, if it is a bit difficult to remember the entire sentence, no problem. Control activities are basically policies and procedures that ensure that the management directives are carried out. That's all. Okay, fairly simple. So the first point is he needs to obtain an understanding of relevant controls. Second one is basically a meaning. The second point is basically just the meaning of control activity. Okay, now control activities have various objectives and are applied at various levels. Obviously that is simple, right? So before making any purchase order, it could require uh, a signature from purchase department and a signature from the supervisor and a signature from the general manager, right? So different kinds of control activities can be applied to different levels. Okay, so there are multiple various activities, control activities, right? So basically it is just one tiny explanation. Okay, so first point is that the auditor has to obtain an understanding of relevant controls, and secondly, second point is they're given a meaning. What is the meaning of control activities? It is basically policies and procedures that are that ensure that management directives are carried out. Okay, next, this is also done. Third point of tiny explanation is done. Next, when okay, how do you find out control activities that are relevant? Okay, control activities that are relevant. Okay, so basically we're finding out what is relevant. Okay, so those control activities that relate to significant risks. Okay, the significant risk is part of chapter 3 part 1 video. Okay, So if you just go see there, you'll get a deeper understanding of what significant risks are. Okay, just as a small reminder, I've just written it here anyway. Okay, so risk relating to fraud, risk relating to development, related party risks, complexity risk, subjectivity, or risk due to unusual transactions. Okay, so these are significant risks. If controls are relating to these risks, then it becomes relevant. Okay, so auditor will have to obtain understanding of those controls also. Okay, secondly, those activities where substantive procedures alone does not provide sufficient and appropriate audit evidence. Okay, so there are some places where you cannot apply substantive procedures. Okay, so there you will have to understand what the internal control is doing. Okay, so if you understand what those control activities are, to get additional evidence of what is happening, that is also a plus point. Okay, so if you're not able to get sufficient evidence by applying your own procedures, then you can also rely on the internal control, right? Next, activities that are considered relevant by the auditor. Fairly simple. Okay, if the auditor considers it as relevant, then it's his choice. Okay, this is basically a professional judgment. Okay, fairly simple. We just go through it once. Okay, the first point was understanding the relevant controls. Second point was the meaning, which is basically that they are control activities are policies and procedures that ensure that management directives are carried out. Okay, next, third point is basically a tiny explanation saying that it is applied at it helps achieving various objectives, and it is applied at various levels. Okay, and the fourth point is it talks about what is relevant. Okay, so basically there are three subpoints in what is relevant. Firstly, if it relates to significant risks. Okay, if it relates to significant risks, then obviously it becomes something that the auditor should gain an understanding about. Okay, the second subpoint was that if the auditor is unable to obtain sufficient evidence through his own procedures, then he can rely on this as well. Okay, and the third point is anything that the auditor considers relevant. Okay, fairly simple. Okay, we'll just go off screen and try to memorize these points. Okay, so we were talking about components of IC. Okay, we were talking about components of internal control, which basically talked about the components of IC were C, R, I, M and E. Okay, so here first we talked about the control environment, so that is done. Next we talked about risk assessment procedure, that is also done. Next we talked about information system, that is also done. Now we are standing at C, which is basically control activities. Okay, and this time control activities. Okay, in that what did we see? The first point was auditor has to obtain understanding of controls that are relevant to the audit. Okay, relevant to the audit. Okay, and second point was basically the meaning of what control activities are, right? So control activity or rather control activities are policies or procedures that ensure that the management directives are carried out. Okay, the third point was It was basically a tiny explanation as to uh, how, or rather, where these control activities are used. Okay, so control activities have control activities help achieve various objectives and can be applied at various levels. Okay, next, the fourth point was uh, what are, or rather, relevant controls, relevant relevant control activities. Okay, what are relevant control activities? Activities relating to significant risks. Okay, and secondly, where, or rather, cases where substantive procedures alone do not provide sufficient and appropriate audit evidence. Okay, and lastly, when or where the auditor considers it to be relevant. Who is stopping the auditor? Who will stop the auditor? Huh? Nobody can stop the auditor. So if auditor thinks that it is relevant, then obviously they can go and check it. Okay, done. We can move on to the next point, which is M for monitoring. Okay, M for monitoring of controls. Okay, so in this, let's go point by point. Okay, how the monitoring, or rather how we have to understand this part of, or rather this component, right? So auditor has to obtain understanding of activities that are used by the entity to monitor the controls. Okay, it helps assess the effectiveness of controls. Okay, so if there is good monitoring, then effectiveness is high. If there is bad monitoring, then the controls are less effective. Okay, management may monitor ongoing activities or separate evaluation, meaning when the activity is going on, they are seeing. Okay, so when the activity is going on, they are seeing, or after the activity is done, at a later time, they will evaluate of what had happened that time. Okay, so when the activity is going on, they are seeing, or rather, or in another case, they'll see after the activity is complete. Okay, so firstly it was so he needs to obtain an understanding of the activities, or rather, understanding of the activities used by the entity to monitor the controls. Okay, so basically we have to understand how the controls are monitored. Okay, for why? Because it helps assess the effectiveness of control. Secondly, uh, second point is basically how they're going to monitor. Either they can monitor ongoing activities, or they can do a separate evaluation. Okay, next. Third point is management monitoring can include communication with external parties that highlight problems or area of improvement. Okay, so the management monitoring can ask external parties also for the purpose of internal control. Okay, so they can make communication with external parties. Okay, next, smaller entities monitoring of control is overseen by the owner or manager. Very simple, right? Firstly, it helps assess the effectiveness. Second one is how these controls are, or rather how monitoring is done. Third is that they can communicate with external parties. And lastly, in smaller entities, owner is the person who will see, who will do the monitoring activity. Okay, fairly simple. Firstly, when it comes to monitoring of controls, the auditor has to obtain an understanding of the activities that is used by the entity to monitor the controls. Okay, the first point is it helps it helps assess the effectiveness of controls. And the second point is how they're going to do it. Either they can perform these control activities when the activity is going on, or or rather they can check on ongoing activities, or they can perform a separate evaluation. Okay, third point is that they can communicate with external sources also, or external parties also, to indicate any problems or get any area of improvement. And the last point is, in smaller entities, the owner or manager will only be monitoring the controls. Okay, so that completes the components of internal control. Okay, there are two more topics of why, or rather what has to be done during an evaluation of internal control, and what are the methods of evaluation. Okay, so if these two parts are done, I think it will be done. Okay, let's just start these also. Okay, so how to perform evaluation. Okay, how to evaluate whether the internal control is good or not. Okay, let's just start. There are only 10 points. Okay, only 10 points. Okay, first, evaluation is an indispensable part of audit of IC. Indispensable means it has to be done. Okay, it can't be separated. Okay, you must do this part of audit of internal control. Obviously, if you don't evaluate whether IC is good or not, then this internal control affects a lot of things, right? Your nature, extent and timing of audit procedures, right? Of further audit procedures, uh, if you're going to set the materiality high or lower, how you're going to respond. Okay, how you're going to respond to the risks, right? So these are the things that you're going to see. Okay, so that is why it is very important that you evaluate whether uh, the internal control is good or not. Okay, so firstly, auditor has to evaluate whether the internal control is adequate. Okay, whether it is adequate or not. Okay, with regard to the size, obviously, with regard to the size of the entity, size and nature of entity. Okay, whether the internal control is adequate with regard to the size and nature of the entity. Okay, second, if the internal control is able to prevent, detect and correct material misstatement. Okay, whether internal control safeguards the assets of the entity. Okay, whether the internal control is successful in safeguarding the assets. And lastly, in the fourth point, whether IC ensures correct recording. Okay, whether IC is ensuring that correct recording is going on, whether reports by management is reliable, right? Firstly, we'll just come back. We finished 5 points, right? We'll just come back from the top. Okay, we're going to see whether IC is adequate. Okay, secondly, we're going to see whether IC is or rather internal control is able to prevent, detect and correct material misstatement, whether IC internal control is can safeguard the assets of the company. Fourth, whether IC ensures correct recording. and the fifth point being whether reports of the management are reliable. Okay, so 5 points are done. Okay, just try to remember these. Okay, uh, you can just write it while you're dictating or while you're telling it by word, right? So firstly, whether it is adequate, right? The second point is whether it is able to prevent, detect and correct. Thirdly, whether it is able to safeguard the assets. Next point is whether it is ensuring correct recording. Fourth point being whether the reports are reliable. Whether they are reliable or not. Okay, so you have to add whether to all of these, right? Whether IC is adequate, whether IC is able to prevent, detect, correct, whether IC safeguards the asset, whether IC ensures correct recording, whether reports by management are reliable or not. Okay, so since I've already put it in the beginning, I have not written it over here. Okay, so basically we have to check whether it satisfies all these conditions. Okay, let's just close this by mistake. Yeah. Okay, so firstly, let's come back from the top. Okay, auditor has to evaluate whether IC is adequate, whether IC is able to prevent, detect and correct material misstatement, whether IC safeguards the assets, whether IC ensures correct recording, whether reports are reliable. Okay, we talked about whether it is adequate, whether it is able to prevent, detect and correct, whether it is able to safeguard the assets, whether it is ensuring the correct recording, whether reports are reliable. Okay, we've come till here. Next, whether IC is weak or ineffective in certain areas. Okay, whether IC is weak or ineffective in certain areas, whether effective internal audit department is in operation. Okay, whether an effective internal audit department is in operation, whether suggestion of improvements, uh, rather whether there are any is basically whether there are any improvements to IC, suggestions of improvements to IC, whether extensive substantive procedures are required, whether this is now questioning to the auditor, whether the auditor has to perform substantive procedures, right? And lastly, whether audit procedures need to be changed from the ones that are planned. Okay. Okay, just zoom into these single ones. Okay, firstly you have to ensure whether the internal control is enough, whether internal control is capable of preventing, detecting and correcting, whether it is safeguarding of the whether the internal control is safeguarding the assets. Okay, what was CR, right? Whether the IC is ensuring correct recording, whether management reports are reliable, right? Next, are there any weaknesses or inoperativeness of the internal control, right? Is there an effective internal control department or internal audit department? Okay, whether there are any suggestions that are to be made to the internal control. Okay, whether any substantive procedures have to be applied, and lastly whether there are any uh, audit procedures that have to be changed compared to the original audit plan. Okay, let's just try to memorize this. Okay, Just try to memorize this. Okay, so we were talking about, get started with components of internal control, and then now we are standing at evaluation of IC of internal control. Okay, so firstly the auditor has to obtain understanding whether, first one, whether internal control, whether the IC is adequate, secondly whether IC is able to prevent, detect and correct material misstatements. Okay, third, whether IC is safeguarding the assets of entity, and the fourth point, whether IC is ensuring correct reports, or rather ensuring correct recording. Okay, next, fifth point, whether IC is or rather whether management reports are reliable, right? And sixth point, whether IC has any weakness or ineffective operations, Okay, seventh point, whether IC has, or whether the entity has an effective internal audit department. Okay, eighth point, whether there are any suggestions to improve the IC. Ninth point being whether any substantive procedures have to be applied. This is all with regard to the auditors. Auditor should answer this. Okay, any suggestion to implement. Okay, so our auditor has to give whether any substantive procedures have to be applied, whether any substantive procedures have to be applied, and lastly whether any change is required, whether any change in audit plan is required. Okay, so these are the 10 points of how to evaluate internal control. Okay, so firstly you have to ensure that the you have to ensure whether internal control is adequate, whether internal control is capable of preventing, detecting and correcting material misstatement, whether internal control is safeguarding the assets of the entity, whether the internal control is ensuring correct recording, right? Whether the management reports are reliable. Sixth point being whether there are any weakness or ineffective operations of internal control. Whether seventh point being whether entity has effective internal audit department. Eighth point being whether there are any suggestions to improve the internal control. Ninth point being whether there are any substantive procedures that have to be applied, uh, and lastly whether there is any change in the audit procedure uh, compared to the original audit plan. Okay, so these are the 10 points of evaluation of internal control. Okay, next, fairly quickly we'll just go through the methods and evaluation of IC. Okay, how to evaluate. We saw what is to be checked. Okay, we saw what is to be checked. Now we are seeing what are the methods of checking. Okay, we saw what is to be checked. Now we are seeing how to check. Okay, we saw what to check. Now we are seeing how to check. Okay, so firstly it is narrative records. Okay, complete and exhaustive description of the system. Okay, so the auditor will take out his book and he'll start writing of he just maintain records of how the internal controls are. Okay, so this is one way of maintaining or one way of evaluating the internal controls. Okay, so here actual testing and observation is required before such record can be built. So he's going to observe how the control environment is. He'll observe the components of internal control and then he'll write it down, so in his book. Okay, recommended only for small entities that don't have a formal control system. Okay, so obviously if there's a formal control system, they'll have formal control manuals, so this auditor won't have to write all this narrative records, right? In that case, you can just use the formal procedure that is maintained by the entity, right? So here the first one is narrative records. He will maintain a complete and exhaustive description of the system. Complete and exhaustive description of the system. Okay, he will do actual testing and he will observe the audit procedures, or rather he will observe the procedures that are being performed. Okay, and this is recommended only for small entities and not for bigger entities that have formal control system. Okay, what are the disadvantages? Disadvantages are difficult to comprehend the system. Okay, so if one person has written, it will be difficult for another person to understand what exactly is going on, because there's no formal system, right? Next, difficult to identify the weaknesses. So if he has just written, oh, they'll do like this, they'll do this like this, for this procedure there are this control, right? The weakness is hard to find. Okay, unless it's a really bad procedure or really bad activity, then prima facie that becomes a weakness, right? So until some procedure like that is there, finding weakness is very difficult, right? Scroll down. And it is difficult to make changes, right? So if there's any particular narrative records that have been maintained, right, so it is difficult to make any changes to that particular record. Okay, next, second part is questionnaire. Okay, so basically you just type up a bunch of questions that you want to know and then you send it to other parties. Okay, so comprehensive series of questions concerning the internal control, right? So that questionnaire is a comprehensive series of questions concerning the internal control. Okay, it ascertains the existence, operation and efficiency of IC. Okay, so most of the questions that will be regarding the existence, operation and efficiency of IC. Okay, the risk of oversight or omission is reduced. Okay, since you are giving it to multiple people, you're getting all of their insights back. Okay, you're getting all of their insights. Okay, so the risk of omissions or risk of oversight is reduced. Okay, answers to these questions are generally yes or no. Members of the audit team send over the questionnaire for completion by relevant staff. Okay, so the audit team will send over the questionnaires to the relevant staff. Okay, fairly simple. Okay, so what was the narrative records? It was a complete exhaustive description of the system. This is a comprehensive series of questions concerning the internal control. Okay, here you write the complete and exhaustive description of the system. Here basically it is description of system. Here it is a comprehensive series of questions. Okay, next is checklist. Okay, the series of instructions and or questions that the member of audit team must follow and or answer. Okay, so when I was working in my firm, they used to give an audit checklist. Okay, so this is basically certain questions that the principal wanted answered. Okay, so uh, whether there is any increase in share capital, right? So if there is an increase in share capital, we would answer yes. Or did is inventory evaluation properly done? Okay, is inventory properly valued? This we can answer only by doing a stock audit, right? So here, after we have done the stock audit, here we'll tell inventory is properly valued, yes. Okay, so it could be a descriptive answer or a yes or no answer also. Okay, so either a checklist or a questionnaire, both. Okay, so it is a series of instructions and or questions that the member of audit team must follow. Okay, so questionnaire is from the audit team to the staff, right? But a checklist, this is questionnaire, but the checklist, right? The checklist is by the audit team for the audit team itself. Okay, so the questions and instructions are to be followed by the audit team itself. Okay, instructions and questions are designed to help ascertain the presence of desirable control elements. Okay, next is flowchart. Gives bird eye view of the internal control system. Just like how I was explaining the components of internal control just by giving you a bird's eye view of what is happening, the same way flowchart also gives you a bird's eye view of the entire IC system. Okay, it is basically a graphical representation of each part of the internal control system. Must it's the most concise way of recording auditor's review of the system. Okay, it minimizes the requirement for narrative records, helps the auditor to understand and evaluate. Okay, let's just start from this beginning part again. Okay, so here narrative records, it is a complete and exhaustive description of the system. Okay, complete and exhaustive description of the system. When it comes to questionnaire, it is a comprehensive series of questions concerning the internal control. Checklist is a series of instructions and or questions that the member of the audit team, okay, here audit team must follow and or answer. Okay, flowchart is a graphical representation of each part of the internal control system. Okay, that is all that is there in this chapter. That's all folks. Okay, quite a heavy and hefty part. Okay, so we're just going to call it a day, right? And we're going to see the next part of this SA3, or rather chapter 3. So this is chapter 3 part 3, right? We talked about components of internal control, components and evaluation. Okay, next part is response to the assessed risks. Response to assessed risks. This is part 4, response to assessed risks. Okay, so this is actually covered under SA330. Okay, I hope to see you guys all in the next video. If you've seen till the end, thank you very much. I hope it was helpful. Okay, thank you, see you later, tata, bye bye.